The Mortgage Minute today being brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. The S&P 500 now down 34 points. The 10-year Treasury is down 2 basis points, 4.109. Mortgage-backed securities are up 9 basis points. That tells us that interest rates are up ever so slightly this morning, but every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming loans yesterday locked at 7.118. The jumbo 30-year, 7.078. FHA, 6.912. And USDA, for those in the rural areas, generally no down payment, 6.961. And the best loan on the market for those that earned it, it would be the VA loan. 6.841 is where they locked at yesterday. But why is all this happening? That's the question that you tune in to Ron Siegel Radio. If you wanted to just know the numbers, you can go to that super secret website. There's just 7 of you listening right now. I saw the numbers, and I know it's Google.com. Don't tell anybody. It was just information that I'm going to share with you. Why is it happening, though? That's the real question. Well, the markets are looking at what happened in the elections. What do they believe that'll portend for the future? If it goes as they're looking at right now, slight advantage to the Republicans in the House of Representatives, and probably the Senate will probably stay as that 50-50. So that means it's with the Democrats. That's called gridlock. And generally when politicians do nothing, it's a lot better than them doing something. What does that tell you about our politicians? But we're going to watch today. The 10-year Treasury note auction is going to come out at about 10 o'clock our time ahead of the important Consumer Price Index inflation report tomorrow. The level of demand is, of course, important for the direction of the bond market, as a strong auction will likely help bonds and rates. But the auction may tell us more. Many bond investors, often called, and I don't know why they call them this, quote unquote, the smart money, may try to speculate how tomorrow's CPI report will come out. If there's a strong auction, it could mean that they believe inflation will begin to turn lower tomorrow. If there is a weak demand, it may mean they think inflation is still on the way up. The auction will be very important and interesting to dissect. The election implications, it appears the Republicans won a slim majority in the House. I told you that. Senate still up for grabs. I wonder if Herschel Walker can get that runoff. Maybe he'll win in overtime. Senate race is so close that there may have to be a runoff like Georgia, meaning that the second election must be held because the first election didn't do its job. May not be clarity in the Senate until the middle of December, maybe. With the Republicans apparently winning the House, that creates gridlock in Congress in order to pass legislation sent to the president for their signature. Both the House and Senate must pass the same bill by a majority vote. This could make it harder to pass further spending bills. That's a good idea. And from a market perspective, may be good for inflation. We did get some encouraging comments or some news. The New York Fed President Williams stated that he's very impressed with the fact that long-term inflation expectations have remained so stable. The 3 most important Fed members are Fed Chair Powell, Vice Chair Brainerd, and always voting New York Fed President Williams. Even though Powell talked very tough on continuing to hike rates at the last Fed meeting, Fed Vice Chair Brainerd voiced her concerns with doing too much, too fast, and now Williams appears to be pleased with inflation expectations remaining stable. That means, well, I'm not going to say what it means. We also received some commentary out of the RBA to the effect that it sees inflation peaking against the backdrop. The 10-year bond yield in Australia moved much lower, but we have yet to see any benefits in the U.S. Consumer debt, this is a big, big issue. Record levels. U.S. consumers piled on $25 billion of consumer debt in September, taking the total balance outstanding to $4.7 trillion. Year-to-date consumer credit is up $270 billion, marking the greatest 9-month surge in recorded history. Consumer confidence is showing that the consumer is being resilient, but are they just continuing to spend, putting things on credit? Yeah, probably. That's why you need to go to our friends at creditsanitizer.com and get a copy of that credit audit. It's free, and the $1 credit report that you need to have just to get that going. So go get that. Make sure you're doing everything you can to benefit your own credit. I've shared this with you before. It is a challenge. I don't know who Josh, I don't know who this is. I just had to laugh here. So somebody says Ron's much prettier in person. We need to get them an eye appointment, please. I'm not sure who that is. Facebook.com / StreamYard.com/user. But thank you anyway.
Facebook.
That
StreamYard.com /Facebook.
Oh, I thought it's user.
User goes 404. I did it right here. And I'm the one who typed that.
Oh, Facebook.com. I'm sorry, StreamYard.com / Facebook.
Yeah.
Oh, okay. So they changed it on us, Josh. We better go and get that corrected. Okay, so that's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call 800-306-1990.